Welcome to the Lend Academy podcast, episode number 79. This is your host, Peter Renton, founder of Lend Academy. Today on the show, I'm delighted to welcome Steve Bisbee. He is the president and CEO at eOriginal, a company that he co-founded about 20 years ago. So eOriginal is a fascinating company. They have basically created a technology to verify original documents electronically. There's a whole host of services they do around that. We actually dig into their technology in some depth in this interview. We talk about what the actual services they're providing for the marketplace lending sector and for other verticals for that matter. We talk a lot about how transparency is important, why it's important. We talk a little bit about regulation, as well as demands from the investor side of this business. It was a fascinating interview. I hope you enjoy the show. Welcome to the podcast, Steve.
Good afternoon, Peter.
Okay, so let's get started. I want to get a bit of background about yourself. I know you've been in your current role for quite some time, but can you give us some background about yourself and your company?
Certainly. So I have been the president of eOriginal really since its founding. I was one of the co-founders. I was also the co-inventor of the eOriginal technology some 20 years ago. And at that time, I've been a small serial entrepreneur. And at that time, I was involved in real estate. I had a title insurance company, and we were struggling at that time with how to have a fully electronic mortgage transaction. There is a national association called the American Land Title Association, ALTA, that was looking for people to volunteer to see if they could come up with a solution to be able to create a fully electronic mortgage transaction. I was asked to join that effort, which I did. And we were able to see, looking forward in the future, certainly not at that time, because this in some ways was pre-internet for financial services, but that you were going to be able to, documents were going to be able to be created electronically, presented electronically, signed electronically, delivered electronically, managed electronically. So then it became involved in the process and the volumes, the challenges in that particular industry. But there was one aspect of the mortgage closing which really became a stopping point. And it was in a mortgage closing, you're signing a promissory note. And that promissory note, that mortgage note, is a negotiable instrument. And by negotiable, it means that one or two parties may contract, the borrower and lender may contract, but that document then gets sold off into a secondary market. Mm-hmm. And in order for that document to be able to be sold off in the secondary market, there has to be only one of them. There has to be a unique document, and there's a series of laws around what constitutes a negotiable instrument and how it works. And the problem in the digital world was you were able to take a document and replicate it any number of times and have it absolutely identical to each other. So to attack that particular problem, with my co-inventor, who was the technologist, we leveraged the technology, PKI technology, which had been created for our weapons messaging system, U.S. weapons messaging system. And to that, we added not only the ability to create a message which was unchanged when it was created, from the time that it was created, but also that there was to separate one message from another, meaning one information object from another. And the technology included atomic date, time stamping, and some other sort of onion layers around that information object to create an electronic original. So that was the foundation of the company. We began to build out the technology. We worked with Fannie and Freddie, major lenders and major title companies. It took us a number of years and substantial investment of time and effort, but by the year 2000, we did the first fully electronic mortgage closing. So that was the foundation of eOriginal. It was really built around mortgage closing, but we found that need for that information object, that unique negotiable instrument, wasn't only true in mortgage, but was also true in almost every financial services sector where you had collateralization or securitization. So we built with GE Capital, we built a leasing application that was going to be taken out, platform to be taken out into the market. And then with Rabobank and a group out of Canada, we built an international trade application as well. So that's how eOriginal got started and what our first products were.
Okay. So I want to just dig in a little bit into the weeds, if I can, and just talk about your actual technology. And I appreciate sort of that summary, but can we kind of get into just an example, like you've got, just to say you've got an original promissory note, and how is it, can you just explain exactly how, when someone's going and looking, doing an audit, for example, how are they going to know that this electronic document is the original document that was signed? What is the technology like?
Very good question, because the information object itself, even though you're able to pull it up and it'll have certain verification indicia on it, you really need a record of what has occurred. So you have the information object, let's say it's the mortgage note, and along with that note you have an audit trail, an audit log. Okay, and that has a sort of a chain of evidence, the chain of custody, and it has the record of all the rights and privileges that have that apply to that document at a particular state in time. In financial services, the instrument may have, well, let's take the mortgage note, in a transaction, the rights and privileges at the time of origination and who gets to play on the documents at the origination stage or the underwriting stage or the closing stage or the post-closing where you're doing audit or you're going out into a secondary market or you're going out to a custodian, you're providing it to an auditor or a regulatory body. It's a multi-party, multi-state environment you have to manage. And this document, this information object, actually travels along that chain. And so in order for you to be able to recognize that this is the original, you have to have a record of everything that occurred about that document throughout its life cycle. So you have the document, but you also have the audit log. And the audit log includes the information about who created it, who had permissions to create it. You can take it down as granular as who has viewed it, certainly everyone that signed it and when it was signed. You have the ability, you must have the ability to determine its integrity, meaning that it hasn't changed since the time it was executed. And so it's the document and that audit log that enables you to determine that there's an electronic original.
Okay, so we're not just talking about a PDF, right, which is how most documents get thrown around the internet that are easily copied. Do you have a proprietary format for these documents? No.
So what we have is a proprietary process. Because one of the things we discovered early on, and when we started, we were using TIFF, not PDF, though we do use PDF almost universally today. Mm-hmm. It's not the format of the information object. It is the process around it and how it is digitally sealed and controlled throughout its life cycle. So it could be a PDF, but it could be a video stream. It could be, we have voice signature. We're able to actually capture a voice as an information object and embed that into a document along with it with an audit log. So it's not so much the format of the document itself, and maybe today we'll have the opportunity to talk a little bit where we see the transition from the world being document-centric in financial services to data-centric in financial services. Mm-hmm. And, eventually we may see what we think about as documentation taking on a different turn in the next few years.
Okay. So you've got the original document. You said it could be an ordinary PDF that anyone can open, but you've got this like a partner file, shall we say, or a partner. It's got to be. I guess it's got to be some kind of readable document that others can say, right, okay, I see this PDF has been opened, 27 times in the last 12 months, and these are the people that opened them, and that's the core to your technology. It sounds like, is it?
Yeah, and also the PKI. So everyone that is utilizing our technology is provided with a digital certificate. And so every instrument that's included in a transaction, it may be 7 or 8 in an auto transaction, maybe 60 in a mortgage transaction, every one of those documents is digitally sealed with a digital certificate. And there's a date and timestamp in it and other elements that help create that being the electronic original. And so because that you can, at any time, that's sitting in the clear in the eOriginal system, mm-hmm. and then any time that instrument is rendered in any manner, whether it be printed or just rendered on a screen, there's a watermarking which is embedded, digitally sealed into that information object as well. So you always know you're looking at a copy and you do not have the original. The rendering is not the original. But as you mentioned, PDF. So most documents today are rendered in PDF, and we enable them to be executed in PDF. And even our partners like DocuSign that are executing documents in PDF. Once they're executed, they then the digital sealing is complete, and then it can be put into eOriginal to be managed throughout its life cycle in a post-execution environment as well.
Okay. No, I get that. That's great. So let's just move on to more of the business side. I mean, what you've got, you obviously started off in the mortgage industry, and I know now obviously you're in the marketplace lending industry. You guys have been around for a while, but before we get to that, so So as you built your company, did you focused on the mortgage industry, and then where else did you go?
So when you may remember, Peter, we had a tech bubble burst in the early 2000s.
Yes, indeed.
Okay. And most of the companies that were involved in digital signature or digital documentation at that time went away. Capital dried up. Any new initiatives dried up. The company that was called DocuTech went under. It came back out as DocuSign, under Tom Gosner, and there's a bunch of the folk players today. But eOriginal was able to maintain itself through that, and actually we transitioned from we were in an ASP hosted environment, originally by EDS and then IBM, and we took that opportunity to create an enterprise class software which could be run in a hosted environment or behind the firewall. And so when we came out in 2002, 2003, we found that the mortgage industry was not going to be rapid adopters of digital technology. Mm-hmm. And we have that discussion another day, but it certainly proved to be true. And so we ended up moving into the automotive finance area. And our first major customer in automotive finance was a company called Dealertrack. And Dealertrack had created a credit application portal for financial institutions in the dealer. So the F&I officer in the dealer would be able to go into this portal and, sort of like a lending tree, select the different lending opportunities for a particular customer for an auto loan. And they came to us because we had been successful in the mortgage industry to enable them to have the same process or a similar process which would apply to auto loans. And so the laws around negotiable instruments in the mortgage industry, they're a little bit different than they are in the automotive in terms of where they are covered. So in the automotive industry, it's under the UCC 9105 for chattel paper. Okay, so that really became our core business for a number of years. So we've supported not only Dealertrack, but Route One, which is a competitor to Dealertrack. We then began to work with various financing sources, manufacturers, banks, where they were doing direct lending, like Bank of America, people like J.D. Byrider, Credit Acceptance Corporation. We provided the ability to do electronic leases for Tesla. And so vehicle finance became a large part of our business during that time frame. Mm-hmm. And it was then that we, in auto finance, that we did the first securitization of fully digital loan documents. And that was done for Nissan Motor Acceptance Corporation in 2005. Okay. The rating agency, primary rating agency at that time was Standard & Poor's.
Interesting. That's interesting.
So we had vehicle finance, we had equipment lease with people like Cisco and DLL and others. We began to move into solar energy with people like BrightGrid and SunEdison, Kilowatt Financial, security monitoring with Vivint and Protection One and others. And then in general banking with consumers, where people were executing consumer loans as well. Vacation ownership, where people had partial ownerships, whether it was deeded or under trust agreements, being able to take them out in the market. Because what we found was that in almost every instance in financial services, there was a need for money, someone had the money, but that money then was somehow moved from the initial participants out into a secondary market, either through collateralization or securitization.
Mm-hmm. Right. Okay. And so it sounds like you've done quite a lot of different verticals over the years. So when did marketplace lending first get on your radar?
Well, it's marketplace lending is, we attempt to follow. I can't say we're, really wonderful at it. So we certainly don't have the presence like yourself, but we tend to follow any of the developing technologies in digital delivery of financial services. And so the first article that I saw was an article in Business Week Online in 2006, and it was about Prosper Marketplace is the eBay of loans. Right. And at that time we were working with eBay with the idea of being able to do online auto loans. So I was very interested in how you could what is Prosper, what is Marketplace, and how are they like eBay? And so the article was about Prosper and Zopa in Britain. Mm-hmm. It was a completely new model for connecting borrowers and lenders, especially small borrowers and small lenders outside of traditional institutions. And I truly believed it was going to be the catalyst for a fundamental change in the availability of capital for small business and startups. I thought it was a way to offer sort of regular people a higher yield on their money compared to what they got in deposits and CDs. And for small businesses, of which I've had a few, you really could get away from the torture of getting small business loans to get a business up and going. So I thought it was, in 2006, I thought it was going to come into the U.S. like a firestorm in the next few years. And once again, I was wrong.
Yes, indeed. Well, so you are very early on when it comes to your awareness of the sector. So then, I guess the next question that follows on from that is, when did you really get involved? And obviously, it remained a retail-focused sector for many years. Obviously not so anymore. So when did you get involved?
So really, in 2012, so when we were watching it, we were seeing the growth of it, and we began to see some additional participants, but we really didn't see the volumes that would merit our investing the marketplace, a marketplace initiative for us. But in 2012, there was a top 5 investment bank that we were working with that was looking at investing in marketplace lenders, and they suggested that we explore marketplace lending, enabling their digital transactions, to enable them to leverage and maintain the integrity and the auditability of digital transactions that we were enabling in the traditional financial services world. So people, in order to be able to not only create but manage, pool, and securitize assets, it takes a lot of heavy lifting in terms of ensuring the verifiability, the auditability, the integrity of these documents, so that they will go out into a secondary market, that the issuers council are not going to, will support them in terms of the legality, but also, more importantly, the rating agencies are not going to give them a lower rating or any differentiation in the rating when they're going out in secondary market just because they're digital. So that was what we accomplished. It was not a small accomplishment. And this investor thought that they would feel a lot more comfortable moving into funding in marketplace lenders if they had that same kind of visibility and be able to the integrity of the instruments that are digital. We have always believed in marketplace lending because a lot of what we have done is taking industries that are paper-based and doing that transformation to digital. That usually involves a hybrid process. It involves a very difficult transformation, and oftentimes it initially costs more money because you're running both a paper environment and a digital environment until you reach a certain percentage of value. Whereas in marketplace lending, it began digital, it stayed digital, and there's a real advantage for us to try to support it. So the first real player that we began to work with was in January of 2013 when we engaged with SoFi. Mm-hmm. And SoFi was even a leader there. They were totally focused on customer experience. They were it was so wonderful to run into somebody in financial services that still had passion. That was not common in financial services here in this country. Mm-hmm. And they were just really confident about what they were going to do. So they were our first customer really in marketplace lending. And by the time we got into 2014, we had our second, our third, and our fourth. But I personally didn't really understand how the marketplace lending model was going to permeate financial services at that time, and until we went to the ABS conference in Vegas in 2014 and saw that the securitization market was really looking forward to participating in marketplace lending because it was a new fields for them, and we saw sort of a convergence there of the desire to bring marketplace lending in the securitization market and the need for marketplace lenders to be able and investors to be able to get there.
Mm-hmm. Sure. Yeah. Okay. So you mentioned SoFi, and I didn't actually know they were your first client. That's fascinating. It makes perfect sense. They really are a leader in many ways. So can you share others? Who else are you working with today? Is there others you can share names of?
Sure. Most of them we are public. Funding Circle. I mean, I think if we went through the chronologically with SoFi and then Funding Circle and then Upstart, Finance It, which is a very interesting company out of Canada.
Yep.
Just and Payoff, Ernst, Borrowers First, Apple Pie, and most recently Lending Club. So these are names I know that you're familiar with, and we've partnered with other players. Like our relationship with Funding Circle was based on our relationship with Millennium Trust as a custodian.
Right.
And some of the players, our involvement with the origination platforms was really due to our relationship with the investors. That the investors felt more comfortable if originators were using eOriginal as their platform for creating these negotiable instruments in their particular space, so that we become a little bit symbiotic in terms of how we work with the platforms themselves. And then, since that time, there's dozens of other companies, the Renovate America and Boat Financing, Credibility Capital, Dealstruck, Mosaic, Kilowatt, and others. So this has become a very important, not only part of our business, but part of our vision as where we see financial services is going.
Mm-hmm. Sure. So I want to just talk a little bit about Lending Club. I don't want to pick on them. I recently had Scott Sandlin on the podcast, but clearly they had an incident in May, and I'm curious about you've obviously been in this industry now for almost coming up on 4 years, and how did the incident in May, which we know in some ways was a data integrity issue, how has that impacted your business?
Well, I think there's been two impacts. The first was when it happened, everybody sort of just there's a lot of negative reaction. There was a concern about what this would do to the marketplace lending funding. But we did see it almost immediately. In fact, the investors that were involved in that turned right around and went back and did invest in Lending Club. But for us in particular, it had a very positive impact. And I think I think we're already seeing the positive impact it's having in the marketplace lending world itself, where people are regarding the need for transparency and for verification, and knowing what you purchase is so crucial. As someone pretty well, Mr. Buskin, noted that the investor loan selection systems are only as reliable as the data that they receive. And so if you have inaccurate data representing the loans, then the systems are likely to make, the investors likely to make imprudent decisions about what to buy. So I think this was always a concern. The event at Lending Club, sort of brought it to the fore. The advantage is that marketplace lenders in a fintech, they can adjust much more quickly than traditional lenders. And so we are seeing that the marketplace lenders and the investor side are beginning to look for the ability to have that verification and to have that transparency, which is really only available in a digital world.
Right. So let's just talk about investors for a second, because obviously you've got two sides of the transaction here. If you're doing securitizations, you've got the platforms that originate the loans, and then you've got the investors who want to purchase them either in a pooled transaction like a securitization, or as and whole loans. Are you being approached by investors today to help them out as well? What are the differences, I guess, between the needs of investors and the needs of the platforms?
The needs of the investors are much simpler because they're not doing the creation. Mm-hmm. And so we think that, in fact, we talked about them here. They're the ones that sort of have the ball mitt. They're the ones that are receiving it. Okay, and so they're very data driven, and what the primary goal that they want to be able to achieve is knowing that which they purchase is that which is being represented. So they're driving the originators to move to digital, and they're spurring on the acceptance in the lending place. We have about 40 investors that have entered into various forms of what we call collateral control agreements with us, and are also involved in some of the investors in the marketplace lending world that you know, like Eaglewood. I think you know John Barlow, who's one of our advisory board members, and but like Blue Elephant, Security Finance, and Route 66, and Jeffries, and Tide Pool, and probably 3 of the top 5 institutional investors are involved with us, and they really are beginning to drive what is going to be I hate, I'm sort of tired of the word transparency, to be honest with you, but they're the ones that are really going to drive the accountability and the verifiability about the assets. So what they're really looking for is that when they're doing the purchase, they get their data tape, and they want to know that which is represented in the data that's being delivered to them by the seller, it comports with the assets. So one of the things that we have built, and it wasn't for this, as we had built this before the incident in May. This actually was something that had been suggested to us by one of the regulators. eOriginal has the ability not only to manage the information object, which is the document, and the audit log, which I referred to, but we also have the ability to capture the data that was used to create that information object. And just like we have that audit trail and audit log attached to that document, we can attach that data. So we freeze that data in time that was used to create that document, and then at a later date, when someone receives that data that represents that information object or that document or that loan document, we're able to do that verification against that. So we know that which you're receiving is that which is being presented to you. And this is very, very important because investors in particular are, if they're driven by anything, I would say it's by that quality, that knowledge, but it's also speed. The investors are looking to make sure that they're able to do these transactions quickly. They want to be able to, it will lower their arbitrage costs. It will lower their speed for funding. And one of the things that the digital format enables you to do is to create an almost programmatic process for getting your assets out into a secondary market.
Yep.
So for like SoFi, who in 2014 did no securitizations, and in 2015 did 6 or 7 for a little under $2 billion, and are actively working today. And they're just one of probably the premier example. They are able to do this in a rapid fashion, and because they've spent such care in terms of setting up the processes to be able to be done digitally and programmatically.
Right. So instead of taking 2 or 3 weeks to do this manually, which is, I imagine, how, and then doing it manually by taking a subset of a pool of loans, obviously you can do this in a matter of, I imagine, minutes or hours. Is that true?
That's correct. It really really depends on the size of the pool.
Sure.
Because remember, one of the things that eOriginal does is that we verify the integrity of every single document in that pool, and we verify the integrity of every signature and every digital seal at any time that these assets are transferred. So it's not quite like sending an email.
Right. Okay.
But even if you were sending an email, if you're sending $500 million in assets, it's going to take some time. But it certainly doesn't. It's within hours. It's not within, as you said, in the days.
Right.
But one of the, I think, principal advantages, if you take the care and you know who your partner is going to be in these financial transactions, you can obviate a lot of the different steps in a securitization by leveraging technology.
Mm-hmm. Mm-hmm. Sure. So I wanted to talk about regulation for a second, because this is obviously an issue that regulators, data integrity is something that they're very clued in on, or they want this to be. This is an online process, so they want to make sure that the data integrity, which is obvious in a paper-based environment, is able to become just as obvious in a digital environment. So I presume you're having conversations with regulators. I mean, what are you hearing from them about what you guys are doing?
So the regulators they have there's a sort of conflicting challenges. Okay, so when you have the ability to do what we just described, where you're able to monitor these transactions, and basically you could monitor these transactions in real time. The documents and the data and how they're moving within a transaction. And so you could actually do the verification of, is this document, the representations in this document the same that was done in the disclosure? So you can get alerts that if you're out of conformance. You can get alerts if you're out of your guidelines or you're out of your compliance tolerances in either whether it's at the pool level or at a transaction level or even at a document level. So the advantage of being able to do this all electronically in a digital format is that your risk and compliance people internally can have a much better view into what's happening in the transactions. The conflicting utilization of that benefit is that a regulator would love to have that access, and it's is that appropriate or not is going to be an issue I think we're going to see coming forward in the next year, a couple of years. But from the regulator's perspective, it is impossible for them to get the level of auditability and visibility unless you're in a digital environment. Mm-hmm. So the regulators are looking for the same thing that the investors are looking for. They're looking for real-time visibility, they're looking for that verification, looking for transparency, and they're looking for the ability to have automated notices and alerts when you're out of compliance or out of tolerance. Because there's no way that they could never have the horsepower or the manpower to be able to monitor it in any other manner. And the traditional audit capabilities of regulator, which occur after the events, regulators understand that this is not to the advantage of the consumer. that with the consumer, to protect the consumer, you really are much, the preference, the desire, and in some cases the passion among the regulators is to make sure that the consumer is protected as the consumer goes through the transaction, not just in a post-transaction environment when irregularities are reported.
Sure. Well, we're almost out of time, and there's much more to talk about. But before I let you go, I want to just get your perspective on whether or not you think that the marketplace lending industry, I mean, obviously it's gone through a lot this year. Do you think there's truly been like a mindset shift this year? So I'd like to get that particular piece. And then if we're really still not there, what else needs to happen, in our industry to make sure that, really this whole idea of transparency, we've said it many times, but it's obviously so critical in what we're doing here. So what are your thoughts on how it's changed and where we have still yet to go?
I think one of the essential changes is going to be the move into greater utilization of securitization. When you remember when marketplace lending was really P2P, and then to reduce their cost of capital, they moved into funds and insurance and then hedge funds, and then they had institutional lenders. But for marketplace lenders to really compete and to be able to keep their cost of capital down, to keep their interest rates up, and their yield, there's such an incredible need for yield right now. We're going to see a greater movement into the securitization market, and we are seeing investors looking for that capability to invest in those types of securities. So I think the marketplace lenders are going to be looking at that process to get to the scalability. Marketplace lending is still a very small portion of our overall financial services revenue in the United States. The idea of getting consensus for more transparency, that's just going to come on its own. The ability to produce these truly authenticated documents to protect the marketplace participants, I think that's going to be coming. But one of the things that we're seeing, and Mr. Barlow raised a year ago, is that we're seeing a convergence. We're seeing, when you look at the regulation, the regulatory environment where the different marketplace lenders were standing on their own not so long ago, but as Congress and state regulators begin to move into the market and look at marketplace lenders, we're seeing marketplace lenders forming associations, beginning to lobby, they're beginning to look like a traditional financial institution. They're looking at the scalability that comes from the securitization markets. They're now having to deal with regulations, the issues around the banks and getting state licenses and the national licenses for banks and how they're utilized by marketplace lenders. The recent proposal that there would be a separate tool for marketplace lenders in terms of regulation. We're seeing marketplace lending move more into the issues and approach of traditional financial institutions, and conversely, we're seeing the utilization of the tools of marketplace lending by traditional institutions. You saw with Goldman Sachs and Marcus. You're seeing traditional institutions purchase marketplace lending or marketplace lending tools. They're looking at how they can, for the first time in many years, they're truly, and without being lip service, they're truly focusing on the customer experience in large banks. So I think what we're going to see much more rapidly than I had anticipated, we're going to start seeing that convergence of what was marketplace lending and traditional lenders really all moving to a digital lending, different types of digital lending environments and platforms.
Well, I completely agree, and I think we're going to have to leave it there. But that's I really appreciate you coming on, Steve. It was fascinating to hear your story.
I appreciate the opportunity. Thank you.
Okay, see ya.
Bye.
I just want to pick up on that last point that Steve made, because it's something that I've been thinking about for quite some time. And that really is the sort of the convergence of the online lending, marketplace lending platforms with traditional lending, which is still very much an offline process. I'm very much convinced that all lending is moving online, that I think you're going to find within 5 or 10 years, it will be impossible to take out a loan in a sort of a offline manner. Everything is going to be going through online simply because it's a more efficient process and many other things that Steve mentioned. And for a company like his, when all lending is online, and it's taken mortgages a long time to get there, and they may be the last holdouts, but with I think consumer lending and all kinds of different verticals of lending, it's moving online. It's an unstoppable trend, and companies like eOriginal are really going to be one of the major beneficiaries of that change. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye.